Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, everything you need to know in 90 seconds at 9 o'clock, where the most interesting move globally has been the forced move by our government to have the RBNZ target housing. Interest rate rises have become a self-fulfilling consequence. But first, in the US, new orders for durable goods in January rose much more than in December and came in much higher than expected, with a 4.5% rise year on year. Orders for non-defence capital goods were up an even better 6.8%, suggesting boardrooms are investing again. The number of new regular jobless claims fell sharply last week to 710,000, a three-month low, and the new number of people on these claims is 4.8 million, an equivalent drop. But there were 451,000 initial claims for pandemic unemployment assistance. Both are still large levels, but they do seem to be trending lower. There's been a series of positive second-tier data releases overnight in the US as well. In China, they're celebrating the elimination of poverty and showering Chairman Xi with accolades for the accomplishment. And China's having trouble containing its African swine fever pandemic. The outbreak is returning again after not really having been defeated in the first round, and the emergence of a resistant strain. In Taiwan, industrial production is climbing fast, up almost 19% in January from a year ago. Retail sales growth is returning too, after lagging for a while, up 3.6% on the same basis. Wall Street has turned sharply lower today after restarting their losing streak. The S&P 500 down 1.9% in early afternoon trade, and now at its lowest point in a week. There is a tech rout underway today, and the rising bond yields are accentuating the downward trend. The US Treasury 10-year yield is up dramatically today, up 8 basis points at 1.46%. This sell-off now has global momentum, all based on rising expectations for inflation. Expectations central bankers can't halt, despite their attempted unison jawboning. The New Zealand government 10-year yield has raced higher another 18 basis points to be up to 1.88%. Recall it was only 1.16% at the start of the month and 1.02% at the start of the year, so the repricing has been sharp, with the largest rises in the past few days. The savage sell-off of New Zealand bonds yesterday was after the RBNZ was forced to add housing to its policy remit. Bond managers think the RBNZ will now have no option but to raise interest rates to preserve affordability. That may have been made into a self-fulfilling consequence. And the price of gold will start today down another $31 at $1,770 an ounce and falling. Oil prices are marginally firmer today, now just over $63.50 a barrel in the US, while the international price is just over $66 a barrel. And the Kiwi dollar opens at 74.3 US cents this morning, with another rise from this time yesterday. It is close to its high for 4.5 years and has risen 33% in a year. Against the Australian dollar, we're holding at 93.4 Australian cents, and against the euro, we've slipped back slightly, back to 60.8 euro cents. That means our trade-weighted index is now up to 75.2 and also a 4.5-year high. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.